Well, I'm trying not to be honest, because
Yeah.
the price we have today of around 129, I think everyone knows in their heart of hearts, it's not a real price. Basically, sterling has got two levels it's going to go to. If we see Brexit reversed, or the softest of possible Brexits, which is increasingly possible, sterling is going to go back up to around 150 and fairly quickly. And if we don't, if we see hard Brexit, which is also still very much and worryingly on the cards, we're going to go all the way back down to parity. So we're effectively in this nowhere space at the moment where everyone pretends this is where value lies. And it doesn't, because politically it's showing us that we're still stuck in this purgatory, and we're not going to be there for that much longer, I don't think.
Okay, let's talk about those two distinct outcomes you've outlined there. Parity in the event of a crash hard deal, I understand that. But when you talk about a soft Brexit and 150, I mean, there's quite a broad definition of a soft Brexit. What would it have to look like in order for sterling to get to that 150 level?
Well, for example, let's say, and this is all purely hypothetical because no one has any idea what's about to happen in the UK today, including Theresa May, of course. But were we to get something like a Norway deal, where effectively you're in the EU in all but name, you have free movement of goods, services, capital, people, etc., deeply unpopular with a lot of people in the UK, but it would technically be leaving the EU. Well, if that were to happen, and you look like cementing a government afterwards that could live with that in perpetuity without someone trying to reverse it, well then why doesn't sterling go back up to where it was a few years ago before the whole Brexit debacle began to unfold? That's the hypothesis I put to you.
Michael, I want to switch gears slightly and talk about Fed policy, because it was interesting. We just heard in that report from Steve Leisman just before your segment, talking really about Janet Yellen essentially telling him that she thinks that they're on the right track there. But one of the conversations that I've been having with Nancy as well has been whether or not, when it comes to a potential recession in the United States, whether it seems as if the chattering classes are talking themselves into this and that it's not necessarily an absolute eventuality.
Well, it's not an eventuality. We are far closer to one now than we were a few months ago. And a lot of that, it has to be said, is because the Fed have no idea what they're doing. But they never have any idea what they're doing. They're just continuing a long-run policy of never having an idea what they're doing. They speak and pontificate very, very wisely in all public forums and talk about this, that, and the other, and publish dot plots, etc. And then the equity market goes down and they change their mind.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.